and welcome. So in today's video we're going to be looking at the different types of property strategies you can maybe look at if you're looking to grow a property portfolio, or just maybe add one or two properties to kind of your pension plan or as an investment. Also as well, if you're going to be looking at property as a business, if you want to use it as kind of a cash flowing business, you want to set it up like you're going to operate it as a business, so you can consider it kind of long term, and it's not just going to be kind of one or two properties if you're maybe looking to scale that. But there are different strategies you can use depending upon what assets you have available. So that could be everything from kind of how much money you have obviously to invest in terms of deposits and buying properties outright, all the way through how much time you have, how many different contacts you have with letting agents, mortgage brokers, refurbishment teams, property sources, a whole range of things. There's loads of different assets that you can kind of bring into play that will help you scale your property portfolio and grow a property business. But when you're starting off, it's important to kind of consider some of the different property strategies as well, and which ones are maybe going to be best suited to those different assets that you have. So in today's video we're going to be looking at just a bit of an introduction in terms of kind of just as a bit of an idea, I suppose, to where I started and the different strategies that I used and kind of why as well, and also a bit of a kind of an idea on potentially what strategies you can go and look for or use kind of later on down the line. Now, I love property because it kind of gives you a load of different options, and that's great, but it can be quite confusing as well sometimes to kind of know where to start. Now, when I first started off, when I finished working as an estate agent and while self-employed to really become kind of a property sourcer and build my own portfolio, I was limited to the different strategies I used because I didn't really have the background or knowledge on which strategies might kind of work best and also what strategies were kind of out there. I came from an estate agency background, so for me it was just a case of looking at potentially buy-to-let properties because that's what the rest of the investors did when they kind of came into the agency, and I didn't really have the funds and the backup to try and go out there and buy properties outright, refurbish them like some of the kind of larger investors were doing at that point in time. So when I first left the agency, I was looking potentially at buy-to-let, so quite a slow kind of steady growth portfolio really, properties that would let well, that would give us a good kind of rental income and work quite well on that basis. Now that as a strategy works very well, but there are problems associated with it as well, and one of those problems that you've got is in terms of potential for kind of growth. And the reason for that is because when you're buying buy-to-let properties, a lot of your available funds will tend to get kind of tied up in that deal, and you're waiting for kind of potential growth or maybe forcing or kind of adding value with a refurbishment. Now, one of the ways around that, and when I first kind of left the estate agency, one of the main kind of criteria I used to look for my buy-to-lets really was making sure I brought them with a discount. So it was using something called, you might have heard, kind of below market value, or basically the principle of buying it kind of with a decent discount. So you negotiate quite a decent discount when you're looking to give an offer and when you're looking to kind of buy the property, and that's great, and that kind of works well to making sure you've got some equity tied up in the deal. But the problem or the downside to that is sometimes, especially when you're starting out, you can get a little bit obsessed about the level of discount that a particular property might give, and then if that's all that's driving you, if that's all that you look at when you're looking at the deal, then you can get kind of unstuck really with some of the properties. So just to give you a bit of kind of context, one of the properties I brought very early on was a buy-to-let property, so I was using this kind of vanilla buy-to-let strategy. I looked at the deal in terms of all the rest of the things I thought was potentially good with it, but it was an area that I didn't really know. It was out of my comfort zone in terms of the tenant profile as well, and the type of property in terms of kind of not just kind of where it's located, but what I was going to get from the property in terms of potential growth. As I said, I didn't really kind of know the area too well. I didn't really have any contacts on the ground that could say it's a good or bad street or good or bad postcode. And at that point in time, although I'd worked at the estate agency trying to kind of pick an area based around some kind of key rules or fundamentals, I didn't really kind of have that grasp. It was just purely local knowledge from the areas I'd worked in, and this was a little bit further out my comfort zone. But the reason why it appealed to me was because it, on paper, it had a great discount. Now, unfortunately, fast forward sort of 7-8 years of being in property now, it's my worst performing property in my portfolio when I look back and kind of consider how it performs on a rental basis and costs and things like that, and profit obviously in terms of how much that deal is particularly making. And the reason for that was because I didn't sit down and consider all of the other elements that kind of go into a property. Now, since then, I've created really 7 kind of golden rules that I now look at with any property deal, and you can see those on the website as well. They're easily accessible, and we've got kind of an infographic and stuff that you can look at. So hopefully it's quite simple. It gives you a bit of an idea in terms of what those rules are, but to give you a bit of kind of bit of a rundown of them really. They include things like making sure it's got the right kind of tenant profile, making sure you can consider your exit strategy, making sure you're looking at the potential for kind of capital growth, and a whole host of other things as well. But as I said, there's about 7 kind of golden rules that we look at there. So discount is only one of those elements, and if you're buying purely on discount, then you can kind of come unstuck. So whether you're doing vanilla buy-to-lets, whether you're doing buy, refurbish and refinance, whether you're flipping deals, whatever strategy you're tending to do, these 7 golden rules can kind of come into play on every single deal that you look at, and it's a great way to kind of help compare kind of apples for apples. But so you're looking at similar kind of deals really, and not just kind of taking them on face value because of the discount, or because maybe you think it might have a high rental yield, or it might be an area for capital growth. You're looking at kind of those key elements that will really make up the potential long-term and also the kind of the short-term benefit of that deal, by considering things like your exit strategy, considering things like how much income that property is going to give you with rental yield and growth and stuff as well. So those are 7 kind of key elements we run through on our training course, as well as kind of run through on the website, but they run through every single strategy that we do. And the second strategy that I kind of did when I finished working at the estate agency, which I kind of fell into really, was property sourcing, because I was finding property deals for my own portfolio. I'd come across 1 or 2 opportunities that didn't really fit my criteria for a whole host of reasons: area, discount, rental yield, tenant profile, a whole host of things that didn't make it kind of fit for me. And also, you run out of money eventually. You don't always have the kind of the funds to kind of just grow a portfolio, especially when you're starting from kind of scratch, or a very little kind of pocket of funds to play with. You're not going to be able to just kind of buy and kind of grow the portfolio indefinitely without utilising other kind of strategies as well. So I went into property sourcing as a view to help raise kind of cash flow really, and because I was coming across these deals, it was pointless kind of wasting them. So that was one of the reasons why we use that as a strategy. And it's a great strategy as well, because when you're starting off in property and you can sell these deals that you're finding off to other investors for anything from kind of £1,000 to £3,000 or more, depending on the property and the location, and also the type of discount and stuff that has gone in there, that's great for your cash flow. It kind of easily replaces a typical kind of 9 to 5 job, and it gives you a great income that you can then kind of roll back into other deals if you wanted to grow your portfolio that way. Or you can just simply be a property sourcer, have it as a great kind of lifestyle income business. So it's a great really cash flowing strategy. So if you're maybe short on cash but kind of got a little bit of time to play with, property sourcing is great. And there's a whole host of other different strategies as well. And this video is hopefully just to try and give you a bit of an insight in terms of the 7 golden rules that we kind of mentioned, and why that's important. Because, as I said, on one of my earlier deals, buying purely on discount really meant that it's my worst kind of performing property since. So it's a case of making sure you understand really those key fundamentals, and also focus is going to be key when you're starting out. Don't try and have 7 different strategies, 8 different strategies that you're going to try and sort of dabble in and do a little bit of. You want to try and focus on kind of 1 or maybe 2 core strategies to use within kind of growing your portfolio or growing your property business, and that's what we'll cover in the next couple of videos, individual kind of insights and really deep, delve a little bit deeper in terms of those different type of individual strategies as well. So hopefully you found the introduction kind of to property, all the different strategies that we're going to be talking about helpful, and then, as I said, in the next video we'll look at each one individually a little bit further. But if you've got any questions at any time, don't hesitate to get in touch, drop us any comments under the video, or simply email me at rob@propertyinvestmentsuk.co.uk, and I'll be happy to help.